It is official now. Oil prices have fallen into bear market territory. That means that they are more than 20% below their most recent peak, which was reached in January, marking the lowest settlement price for oil this year. Domestic crude fell by 2% today, closed around $43 a barrel. The reason for the decline is a familiar one. There's simply too much crude on the market and not enough demand. The world's biggest oil producers tried to fix the problem, but as Jackie DeAngelis tells us now, the fix is showing some cracks.
Crude oil lower again on concerns about oversupply, which is not what's supposed to be happening right now. OPEC is committed to cutting output this year, but some member countries like Libya and Nigeria are cheating.
I think there's a couple different reasons for oil's decline, and they kind of all culminated in a perfect storm. First was the belief that OPEC didn't have the same control over the oil market that they once did. So when they agreed to production cuts, the market started to decline as well. Then I think the market believed that the OPEC members were beginning to become frustrated with that situation, and that exacerbated the move lower. And we've talked about it for years, supply. There's a ton of supply still. So right now I think everybody is talking about the bearish reasons for crude to go lower. So I'm starting to worry about this a little bit now because it seems like everyone's on one side of the boat.
Adding to the pressure, demand is not rising to meet the excess supply, and it should be this time of year. Over 100-degree temperatures on parts of the West Coast, combined with continued rain on the East Coast, keeping travelers at home. Finally, North American production, the U.S. and Canada, both forecasted to rise significantly. The U.S. could produce a record 10 million barrels a day by next year, according to government data. An IHS Markit says Canada could ramp up to 3 million barrels a day in the next 2 years. So the question now, how low can we go?
I definitely think the 30s are a possibility medium term. I think before that happens, we're due for a bounce. Like I said before, I think that people are positioned short quite a bit, and I think we could get a bounce from the 42.5 area up towards 48. At that point in time, I think we resume the trend lower, and that leg lower gets us into the 30s for sure, in my opinion, 38, 37.
4th of July is the peak of the summer driving season, now only 2 weeks away. Without the seasonal boost for crude prices, some say it could be a while before we see 50 again. For Nightly Business Report, I'm Jackie DeAngelis.